This is episode 5 of the Local Life Ontario podcast. My name is Henry, and on this channel I talk with local people about things affecting our life here in southwestern Ontario. In this episode, I discuss some of the basics of stocks and finances with Tony Fehr. Thanks everyone for tuning in to another episode of Local Life Ontario. Today I have another guest with me. He's one of my 2,000 Facebook friends. His name is Tony, but this is the first time we've actually met. So I don't know. So I have almost 2,000 Facebook friends. So how many do you have? You almost there?
I'm on the cusp of 2,000. Yeah.
Are you?
Yeah.
So how many of those do you actually know? Probably about as many as me.
Every single one.
Wow.
No,
You're doing pretty good.
No, just adding connections who seem to be interesting to me.
Yeah.
Yeah.
So I don't even know how long I've had you on Facebook as a friend for, but I know it was while I was still in Mexico, right? So I've only recently been back. But one thing that I did see then on my Facebook when I had you on there was go see Tony.
Oh, yeah.
Right? Go see Tony. That's what you had going on because you were doing car sales in St. Thomas, right?
Yeah.
And so there's always this hashtag I saw, whatever, go see Tony. Or there was a few people that I know also on Facebook. They had maybe bought a car from you.
Yeah.
Go see Tony. So I remember you from Go See Tony.
Yeah. This is the thing I set up a couple of years back just for exposure purposes. It's kind of a funny story you mentioned that. My old general manager from the car dealership, I've been out of the car world for 2 years.
Yeah.
And he called me and I was like thinking, oh, what did I do? Like, why did he call me? Because we don't really talk.
Yeah.
And he said, hey, he's like, hopefully everything's good. If you wouldn't mind, he said, would you actually mind taking down the Go See Tony thing? I said, oh, I haven't even thought of it for 2 years. He said, yeah, it's not a big deal. We actually got some leads through it. But he said that the challenge is that there might be some bugs in your system and it's pulling in inaccurate information from our feed. Mileage is off. You got kilometers supposed to be in miles. And it's just kind of funny you brought that up. Yeah. And he says, do you mind taking that down? I said, yeah, honestly, I didn't give it a thought that I had my own little Go See Tony website.
Yeah, and people are still going to want to go see you.
Yeah.
And you're not there anymore.
They can go see me for other stuff.
Yeah, they can see you for other stuff. And so that's why I'm here. Or that's why you're here now.
Yeah.
Right? I'm like, hey, I want to find something out. Hey, go see Tony. Here you are.
Maybe I should revive that, resurrect the Go See Tony.
Yeah, you should. Yeah, Go See Tony.
Yeah.
So now it's for other things, though. So in this episode, what we actually want to talk about is stocks and the stock market. So in my pursuit of knowledge and trying to figure out what's going on now that I'm back in Ontario, I've gone through some political things. Had some guests talking about local politics.
Right.
Figure out what's going on here, and even federally. It's been a pretty feels like important time in politics the past while, right? So just to get to know those things a little bit better. But another thing that you also see a lot of is the stock market, especially right now. I'm thinking even about Trump, and that's, the things going on with tariffs and the whole world. And the stock market, right? You got a lot of up and down and a lot of down lately.
Yeah.
And, but, you hear a lot about stocks and I mean, even before this, you always see it on the news. But I've never really been involved.
Right. Okay.
And I want to learn a little bit more. And so why I get Tony to come here is that way I don't have to pay a consultation fee, right?
That's right. Yeah.
So I get knowledge without the fee.
Yeah, and you won't get an invoice. You're good.
So your job right now, though, is, I wrote it down here. So Regional Vice President with Primerica Financial Services.
Yes. So
tell me, first of all, what is that? Before we get into stocks and things like that, what is that exactly?
A regional vice president is just a fancy name for broker, right? Okay. So I run an office for the company.
Okay.
I'm an independent contractor. I'm self-employed. I did, when I first got my certifications, I was still in the car business, and my intention is to sort of find a way to maybe glean some extra income, right? Because I built good relationships with my clients. I thought maybe I can work with them on the investing and the lending side too, as a separate thing. And then some other things happened. I realized I actually need to go full time. I was faced with a situation where I actually needed to leave the car business.
Okay.
But the goal was, if I was going to do this, I didn't want to just be an agent. I wanted to be a broker. It's our business is set up very, very similar to a real estate operation. So you could be an agent, or you can be a broker. Right? And a broker has a license to sell homes, but he's also mainly focused on talent acquisition, headhunting, and I wanted to be my own boss. So I actually ended up selling my real estate portfolio, and I just wanted to say, okay, if I'm going to make any money for the rest of my life and have a business, I just want to go jump in with both feet, and I exclusively am working under the umbrella of Primerica. Yeah.
Okay, and so I do know this also involves life insurance as well, right?
Yeah, huge part of our business.
But it's not just a life insurance company. It's also other
Yeah.
financial things.
Yeah, in 1977 is when they started. And they were always
Okay,
a term life insurance company. In the 80s, they got into mutual funds. And now we've turned into this web of financial services where we do everything from mortgages to debt consolidation to life
okay,
insurance and home and auto. And obviously, a huge part of our business right now, especially mine, is the investing world.
hmm,
Yeah, which is a lot of fun. It's a lot more fun to talk about investing than paying for insurance.
yeah, yeah.
Insu-
Investing, you're like, hey, yeah, I'm gonna make some money. I want to make something.
Insurance just costs you money.
Yeah, and I don't like that.
That's right.
I want to make money.
Yeah,
So that's what we want to talk about today.
yeah,
Now, we don't want to get into like very deep, ways of the financial system and how to do all of these things. We want to go through some very basic terms, right, of what stocks even mean, like
hmm,
the things that you hear all the time. We want to get into that a little bit later. So not a very in-depth one. This is for guys like me that are just learning,
okay.
right? So you don't even have to pretend like I don't know anything. Like it's real. I know nothing. So you're gonna do baby steps. But before we do that, so this is the guessing game. I took this picture. I'm a great photographer. I took this yesterday, actually. Do you know where this is?
Yeah, I do.
You do.
Hmm.
Where is it?
Am I supposed to guess now or at the end?
Oh man, I'm debating. You know what? At the end.
Okay, sure. I'm like
We'll
95% sure I know where it is.
okay. We'll let these guys online too see if
Yeah,
they.
sure.
If you want, drop a comment. See if you know where it is. This picture, and at the end of it, yeah, you can tell me, and then
Yeah,
I will let you know whether you're right or wrong.
yeah. Well, I've been in around this area my whole life.
Okay.
I grew
Yeah.
up in Springfield,
Okay.
and then I've always been around here. For 2 years, we lived out past Shedden and Iona, but now
Okay.
we're back in Aylmer because there's just something about that town. I think we're gonna stay there forever.
There we go. So that's where you live now
Yeah,
in
it's where my
Elmer.
office is there too.
Okay.
I'm
Nice.
walking distance from my office. I actually like to walk to work now. So
Okay.
yeah,
Yeah. So I'm thinking. Yeah. I'm guessing then you should know where this is
probably.
if you're so local.
Yeah.
But you sent me a few slides.
Hmm.
These don't necessarily have to do with stocks, but this is a good starting point when thinking about investing
Yeah.
and just the importance of investing and just some very simple pictures to give us an idea.
Yeah.
So let's just go through. Oh, not this one. Way back here.
Yeah. There
There
we
it
go.
is. Okay, start with this one. Explain what is this? The rule of 72.
So this is actually what really attracted me to the industry in the first place. See, I always knew that there were people out there that were investing money.
Yeah.
All I knew about the stock market up until I was like 27 years old was that I just associated it with gambling. And
Mm.
I'm really not a gambler. I've never even bought a scratch ticket.
Throw
So
some money out there and hopefully you get something, but maybe you lose it all.
yeah,
Yeah.
yeah, because I grew up in kind of financial hardship,
Yeah.
so I just really wasn't interested in doing any gambling. And so the only thing of investing I knew was real estate.
Mm.
And so I had some rental properties, and all I understood was if my mortgage was this and I could rent it for this, then there you go.
Mm.
But someone shared with me, well, you ever heard of compound interest? I said, I've heard of compound interest.
Mm-hmm.
And really, there's two kinds. There's simple interest and compound. So let's say if I want to start a business, Henry, and I say, Henry, I need to borrow 100,000 bucks, and you can go ahead and charge me 10%. I'll pay you in a year.
Mm.
Well, simple numbers, we know that in a year I owe you 110.
Yeah.
But compound interest is where your interest will earn you interest over and over again.
Mm-hmm.
And there's a man that we've all heard of by the name of Albert Einstein. He wasn't just a German scientist in the war, he was also a money fanatic.
Okay.
He
I never heard
actually,
about that before.
what's that?
I never heard about that
Yeah, he
before.
loved
Okay.
investing, loved borrowing, lending, and all the interest rates and all that stuff.
Okay.
And if you've ever seen those financial charts where the line kind of swoops up,
Yeah.
he calculated how the heck does that work? Well, how is it all of a sudden swooping up like that? And it's called the rule of 72. It's the easiest math formula, but it's probably the most important rule when it comes to money and investing.
Mm.
And what it shows you is all you got to do, if you have your money invested somewhere, and for those of you online, if you have some money invested somewhere and you get your statement, it shows an average rate of return you might be getting. The rule of 72 says if you take the number 72 and you divide it by the interest rate, it's going to show you almost to the T how long it takes that money to double.
Okay.
So if me, you, and a friend of ours, let's say we each win a prize of 10,000 bucks, I go to my bank, I bank with BMO, and they say, hey, Tony, you should park your money in our high interest savings account. Well, 72 divided by 3 is 24. So it takes 24 years for my money to double.
Okay.
Not super exciting.
Yeah.
If you go and you get double the rate of return, it's actually 4 times the money. Your money's doubling every 12 years. But if someone averages 12%, their money's doubling every 6 years. So when I saw 10,000 turn into 2.5 million,
Yeah.
I was shocked because I always kind of assumed that I could never become financially independent because I'm a high school dropout.
Yeah.
And I don't come from money. I'm not expecting a big whopping inheritance one day. But then when I saw that, I realized it's not true.
Mm.
But the one thing I did notice too is it's pretty boring. See, even that $80,000
Yeah.
at 18 years is pretty boring. That's not all the money in the world. The temptation to go and take a trip
Yeah.
or do a kitchen renovation was there. But if you let it do its thing, it's extremely powerful.
Yeah. That 80,000, that's pretty boring. That 2 million at the bottom there is not so boring, is it?
No, it's a little more exciting.
Yeah.
Gets you thinking. So that's what we show people is that, it's not about how much money you have. It's about how early are you starting, and obviously the rate of return you can average on your interest is important too.
And so this one here, then, for example, let's go with the 12% because that's the really interesting one.
Yeah, we all like that.
I mean, that's obviously harder to get, right? The 12%, but people get it, right?
Sure.
But so thinking about that, so this is just like you're not adding any more money though, right? So that's just the 10,000 is there at the beginning, and you put nothing else in
Just
there.
leave it alone.
So, for each of these, I guess, each of these columns, it would be higher if you're investing every month. You start with 10,000, then every month you're putting another 100 in for 40 years or whatever, or 200 or 500. Then obviously those get bigger. But this is just starting with 10, and then depending on how many years you wait, these are the results.
Yes, that's exactly right. Now, interest rates fluctuate and stuff like that, but we're talking averages. That's basically how it works.
Okay, so this is a simple diagram. So that makes sense. So you said the percentage, whatever percentage, and so if somebody else is investing or maybe has somebody investing for them, and they say 7%, like we're giving you 7% a year, then you would just say 7% divided by 72, and then that's going to tell you this information as well.
Almost to the T, and that's just kind of where they know they're on track to have. Yeah, absolutely.
Okay, let's go to the next slide then that you sent me. So the high cost of waiting. So explain what this is.
Well, there's always a price to pay in life. You can pay it now or you can pay it later. And what we show people, and it just kind of going, when it comes to Rule 72, they say, well, that's exciting, Tony, but I can't even save $10,000. And with the way inflation is, actually hyperinflation, it doesn't surprise me.
Yeah.
So let's talk about something that most people can identify with, which is $200 a month. $200 a month, not at 12%, but 9%. And let's say you did that for 40 straight years, 25 to 65, starting from zero, and you never stopped, you never took any money out, you never put it on pause, you never added any extra. That 25-year-old has got close to $1 million, just $200 a month. Now, if he waited 1 year, he'd save $2,400 by waiting, but it cost him 80 grand. Wait till you're 30. I'm 30 years old for 1 year. Yep. And then 350. And then at the age of 40, it's a $700,000 mistake.
This is where I am right now.
Well, yeah. So this is both informative and irritating.
It's like I'm down here now.
Yeah, you'd have to feed it with some cash to catch up.
So $200 a month here would give me that. Yeah. So I gotta work a little harder or figure something else out.
Yeah.
Okay.
I'm 30, so
you're there.
I'm still not excited about what I saw.
There we go. So we'll put it $300, right?
Yeah.
Okay, let's see what the next one is. So the 3 Ds of investing.
Yeah. So I mean, and you can kind of tell that our business is based on education. We're very, 7 out of 10 Canadians are going to retire broke. And the number one reason is lack of education. I went to public school. I had friends that went to private school, and I had friends that were homeschooled. And what we all have in common is we don't know anything about money. We didn't learn. And so we get a paycheck, but there's no owner's manual that comes with it. So investing doesn't need to be some pie in the sky, smoke and mirrors thing. It's just simple concepts that are not new. You won't just hear it from us. You'll probably turn on Dave Ramsey. You'll hear 8 out of 10 of the same things that we talk about. So as the 3 Ds is that number one, if you're going to be an investor, you should be disciplined. Just understand that there's ebbs and flows in the market, like what we got going on right now. Diversified, right? It can be very reckless and dangerous if you're choosing to just invest in individual things if you don't have the skill with it. And this is my favorite rule, and a lot of our clients, probably 150 of them, are benefiting from this right now. Is the most powerful strategy that average Joe, you and me, can use when it comes to the stock market, which is called dollar cost averaging. And that's just a complicated way of saying being an investor.
Mm.
And not just dumping a lump sum in like the rule of 72 with the 10,000, but actually being that person that's doing $200 a month.
Mm-hmm.
And actually
Just being consistent with something.
that person's going to win. Slow and steady wins the race. And actually it's even take it a step further is not just investing monthly, but investing weekly.
Mm-hmm.
Why do you think that is? Why weekly?
Because then you get that week already added to the percentage that's being added, right?
Yeah.
So right now you're already getting, how do I say it? It's already included in the interest that you're getting.
That's a great point as well, but it's also, is the stock market often changing? Is it
Okay.
changing? So what you're doing is, rather than you trying to time the market, right? So I just want to be very clear. Our business is not set up to get people to time the market perfectly. Rather, we believe in spending time in the market. See what I mean? There's a big difference there. And so because the market has its ebbs and flows, sometimes over a couple of days basis, you should actually invest weekly because you're guaranteeing to buy the best days in the stock market. By always buying. Right now, anybody who's investing in the market in the last month has been getting a 10 to 20% discount.
Yeah. I just started this month, right?
Awesome.
And
that's good.
So I got Wealth Simple. So I want to talk a little bit about Wealth Simple before.
Yeah.
So I was looking on different ways of investing. So we want to get into all kinds of things like that.
Yeah.
But that's besides the point for now. So I just started this month. So maybe not even quite a month ago. So on through Wealth Simple.
Nice.
And so I've bought a number of different things, and I'm up in this month already from $1,200. That's the investment that I have in there, or $1,100 in one. I actually have two different accounts. The one didn't allow me to invest. I didn't realize that. It was a different guy. But anyways, so $1,100 in this one account, and then now I'm already up 40 something dollars. So I'm at about 4.5% that my investments have already made me in 1 month. So if this would continue to go, then I guess I would be at about 50% by the end of the year if that growth would stay the same.
Yeah.
Right, 50% in 1 year. So my $1,100 would be $1,600 by the end of the year. Now, but this up and down you're talking about. So this morning I checked it and it dropped to about half of that. So I was into 20 something dollars. And then at 5 o'clock, though, when the stocks close and stuff, then I was back up to 40 something dollars.
Yeah.
So that's how quickly things are going up and down
throughout the day.
Yeah, that I noticed, right? And so I'm just starting to look at these things and I'm noticing this, right? And how quickly things go up and down. And depending on what you see on the news. So I'm listening to the news and then listening to see what Donald Trump says too, because that's pretty,
he's got an influence.
Yeah, he's got an influence on things. So I'm watching some of these things, right? And so it's interesting to see what affects what, right? Or different announcements or what certain companies are saying, right? Different politicians. And then all of a sudden I look, right? Okay, this is going down, or certain ones go down and other ones are going up, right? So it's very enlightening, but it fluctuates very much.
Yeah.
But right now, like I said, I'm on the up, but I'm down in the dip as it's often called, right?
The dip, yeah.
That I'm hoping isn't going to dip too much further now that I'm in.
Well, we're in probably the sharpest dip since 2020, actually.
That's what I've heard. Yeah.
Yeah, sharpest dip. Actually, but it said that April was the worst April since 2008.
Okay. Yeah.
So that's as far as performance in the single month, it's a lot of global action, a lot of influence, and took the market for a dip.
Yeah. And so, like, what you're saying is then just to be consistent, and you would advise weekly is what you say, right? Just every week, whatever the amount is, right? If everybody says, if you do $5, do $5. If you do $50, do $50, or whatever, $500.
Yeah.
But just to do it consistently, preferably every week.
Yeah.
And okay.
As an investment dealer, our minimums are $25. So just make sure at the very least, and just be involved in something. $25 a week.
Yeah.
Is just keep doing it, right? I'm really excited about that because it can be disheartening, if you're pretty new to this, that, man, this is the first dip you've experienced. Because last 5 years, if you didn't double your money in the last 5 years, there's a problem.
Yeah.
And so we had funds that returned some as high as 48% last year.
Yeah.
And now so far we're down this year. But those people who are consistently putting money in there, they're gonna be really excited.
Yeah, because
Those
usually,
shares being worth more.
yeah, from what I read, like once it starts to go up, then up until now, anyways. I mean, we don't know the future,
We don't
right? And
know.
I
Yeah,
don't
we never
intend to.
know.
But what seems to be the trend is it drops, right? Sometimes more than others, but then it goes back up quickly often,
Hmm.
right? Once it does, then there's a quick rate of return
Hmm.
for a period. And I see it on some of these graphs, like from the stock market and stuff. And
Hmm.
I look at those two, with the 5 year and the 10 year, and I see this, right? So it's going up steady like this in general, right? Going up like this, and then you have this dip down,
Hmm.
right? And then it goes up again though, and then it goes way higher after. So
Yeah,
you see that a lot. Like this is the long term investment
it is.
idea, right?
Yeah, it is absolutely.
So that
Yeah.
even though things are going down now, in general, how things have always worked is the long term, it still ends up high,
Yes.
right?
Yeah, for sure. Yeah, if you're, I mean, um, basically, if you would have put $10,000 into the stock market in like any just average growth mutual fund or S&P 500, Dow Jones,
Mm-hmm.
you'd probably have 10 years ago. You probably have about $40,000 today.
From 10,000, yeah,
Yeah. You should be, as long as the money was managed appropriately and
yeah.
that type of stuff. So, yeah, we just came off the biggest run that that the markets have ever seen.
Okay.
After the 2020, that
Mm-hmm.
type of stuff, right? It's important to understand that the market and the economy are two different things. Our economy has been in a tailspin, but anybody who's investing in the market is making money. So it
Because
goes to show
businesses are still growing.
business is still business, right?
Mm-hmm.
Obviously, politicians and stuff, they influencing world events and wars and rumors of wars,
Yeah,
but business is still business.
yeah.
And the reason why we're seeing this dip right now is not because of necessarily that the tariffs are bad. A lot of the big companies are very excited about them.
Okay.
All right, they're not bad for everybody, but what they don't like is inconsistency. What they
Mm-hmm.
don't like is the flip flopping
Mm-hmm.
and the making the deals and then bailing on the deals and the 90
Yeah.
day pauses and all that stuff. Is
Yeah, there's been a
we
lot
just
of that. Yep.
we just want to know, as a business, what are the rules that we're playing with so we can go play.
Yeah.
What are our parameters that we can work with,
And
and
then
that's
adjust accordingly.
that's it.
Yeah,
That's
makes
what they
sense.
want. That's where the frustrations come in, and that's where the roller
Yeah.
coaster effects sets in. Yeah.
Okay.
Mhm.
So then here we've had kind of, the basics of, just investing, the sooner the better,
Mhm.
right? The idea of compound interest. In the end is always much, much more than the beginning, right? And how fast it goes up at the end.
Certainly. Yeah.
And then you have this fourth one here. This is just where you got these
Yeah,
slides
and
then.
and you know what? Maybe we probably could skip past this one because it's actually a link and you can't actually open that up from here. But it was
Okay.
just an example of a
Yeah.
fund I wanted to share with you.
Yeah.
Kind of like what you talked about, where if you look at the last 50 plus years, that's exactly what happens, right? You got this 3 to 5 year bull run, and
Okay.
then something happens and it causes like a 10, 15, even 20% correction,
Yeah.
and it's stubborn for a while, and then it takes off again for numerous years.
Okay.
Uh,
You mentioned correction, so let's touch on that then a little bit. What is a stock market correction exactly? Because I hear it often. So what exactly is that? What is being corrected?
Well, I mean, I think a good example was what we're going on right now, right? Is that we've had an overinflated economy, right?
Okay,
An
yeah,
overvalued
yeah.
economy.
So this was another question I have. What
Yeah.
do people mean by overinflated? Like, what does that mean?
So we're just feeling the ripple effects of hyperinflation, right? Like our
Hmm.
governments between the U.S. and Canada and in Europe is we just spent so much money. We pumped so much money into the system, and so everybody was doing well. If you can remember, like I know you're in Mexico, but if you were to check back in 2020, 2021,
Hmm.
into 2022, anybody who's in any type of business is making almost too much money. It's like it doesn't make sense. There's just jobs and jobs and jobs.
Hmm.
They're getting so much stuff there, and that was great, but it actually wasn't natural. It wasn't good, and so it overinflated all stocks, and we actually needed an event like this to stabilize where it should be. Real estate was overvalued. People out
Okay.
here were so that's kind of what we're in right now, and so
So
we need events like this to correct.
okay. So what you're basically saying is basically the idea is that something is it says it's worth this much, but in reality it's not. It should be dropped.
Mm-hmm.
Like that's what this overinflation is. Like because of
Yeah.
whatever the reasons are, like the stock price is really high on this
Mm-hmm.
company,
Yeah.
but in reality it should be corrected, like it needs to drop.
Yeah, exactly. Yeah,
Okay.
it was hyperinflated. It was too quick. It was too natural. It was too unnatural.
Hmm.
Like yeah, if you look at the last 5 years, it was a shoot for the moon thing. But
Yeah.
really, it should be just a steady incline.
Okay.
Yeah.
Yeah.
Without
Okay.
going too technical into it, maybe we already
Yeah.
did. Sorry.
Yeah. No. So this is good. Yeah. I mean, there's obviously a lot more details to a lot of this stuff, but this is really good so far. Let's go back to the idea of stocks then in general.
Uh-huh.
Um, what is a stock
Uh-huh.
exactly?
Well, a stock is literally a piece of a company that you can decide to own it. That you can decide to own. Like I like to illustrate, it's kind of like Nike. Is it? You can buy shares of Nike. You can buy shares of my company, Primerica,
Okay.
Enbridge Natural Gas, right? McDonald's. Those are all publicly
I
traded
bought some
companies.
Nokia shares the other day.
Nokia.
Maybe
There
that's
you
kind of
go.
nostalgic. I don't know. I
Yeah, there
hope
you
they
go.
go up.
Yeah.
just,
Just,
just a few, not very many, but it's like
yeah,
I'd like to
whatever.
see that company. They used to have these nice little phones that would just last forever. Right? Everybody knows that.
Yeah, oh
You
yeah.
guys all know those little Nokias.
Yeah, I remember when my older brothers got their first
And
ones. I thought it was the coolest
and
thing
so I
ever.
mean they really went down, right? But it sounds like maybe they're on their way up and they got some things going on. But
Yeah.
I guess sometimes there's those companies that you remember, like
Hmm.
you know.
Yeah. So
And
when you invest in one, you can be a partial owner of the company.
yeah,
And then so I like to call it. It's kind of like a chocolate chip
yeah.
versus when you invest in something called a mutual fund, like what we deal in, or the
Mhm.
S&P 500, Dow Jones. It's kind of like a chocolate chip cookie, where with your amount of money, you don't have to save up to buy one whole share because some of those shares, those stocks are very expensive,
Yeah.
thousands even. For something as little as $25, you can get a small piece of all this stuff. And so
Mhm.
you have a chocolate chip cookie instead of just a chocolate chip, and it's very diverse. When Nokia is not doing well, McDonald's and Nike are doing really well, and so it balances that out.
Mhm.
So I don't actually sell individual stocks. I never
Okay.
have, and I never will.
So I guess you brought up the Dow. So these are three that we always see like on the news brought up,
Yeah.
right? So you have the Dow Jones Industrial Average, what they say. You got the Nasdaq, the S&P 500.
Hmm.
There's some other ones that are frequently brought up.
Yeah.
So what exactly are these then?
Well, I'll be honest with you. I base all of my stocks off of the S&P 500, but these are all index funds. And when you
Okay.
think index, it just means average. So
Okay.
these are exchanges where people trade, right? If you've heard of the New York Stock Exchange,
Mm-hmm.
the Toronto Stock Exchange,
Mm-hmm.
right? There's a Texas Stock Exchange going soon. There's a global one. So these are funds that are traded on these exchanges. And the S&P 500 stands for Standard and Poor 500. Poor is not like it's bad. It's a last
Okay.
name with an e at
Okay.
the end. I
Not
don't
the
know why.
standard people and the poor people.
No, I don't know where that comes from, but it's
Okay.
500 companies.
Okay.
500 companies, and it's driven by the top 7 companies on the planet, the Magnificent Seven.
Yeah, like like you got
Apple,
Apple,
Nvidia,
Microsoft,
yeah,
Nvidia, and yeah,
yeah,
some of these.
Amazon, yeah,
And but so the 500 top
companies in
companies in
America,
in America.
America, yeah, in
Now there are
America.
other S and Ps as well, right? I think I saw S&P Global.
Hmm.
So is that the idea again that you have the top global companies
Yeah,
in the world
yeah,
in that bracket?
yeah.
Okay.
So one thing just for your audience too, because I talk to a lot of people that say, "Oh, I invest in the S&P 500."
Yeah.
You can't invest in the S&P 500. It's impossible.
Oh,
That is literally just an index. And when you see all these things global, those are what's called ETFs, exchange traded funds, that are run by a computer. Instead of a financial advisor, they're run by a computer, a robot. And all they do is they mimic and track what the S&P 500, because that is just an index. Index. They're just
these
averages of what the
okay.
market's doing. So
Okay.
so it's virtually impossible to invest in it because that is just the average.
Okay, I get you.
Yeah.
So, okay. So the Dow Jones then, are they looking at different companies than
A lot of
the
the same
S&P?
ones, but a lot more than just 500. As
Okay,
if you look
this
at the cost of the Dow Jones right
yeah,
now,
like
it's
it's
40,000 and whatever. And the S&P's like I don't know 5,000, and I don't even pay attention to the Nasdaq. I'm so
okay,
far.
yeah, so that makes a lot more sense then.
Yeah,
Okay, so this is just it's just giving the numbers of so and so many
that
companies.
are listed on that exchange.
Okay, and what the average is of how that's going up.
Yes. Yeah.
All right, okay,
And you
because
can
I would have
decide to isolate them and say this is cool.
yeah,
How is Microsoft doing within there? And
yeah.
it'll show you performances and stuff like that too. If you're the kind of
Okay.
person that's inclined to buy individual stocks as
Yeah.
opposed to funds and portfolios.
Yeah.
If you
Okay. So if you wanted to, you say, hey, you know what? I want to invest in the S&P 500. Well, then you just take all of the 500 companies that are there and you put $100 in each or whatever.
that, or you could just buy an ETF. I mean, most of our
Yeah.
mutual funds are based on the S&P 500 that we offer. That they,
Okay.
like
Yeah.
almost all of them are.
Yeah.
Where they'll have a couple of those good companies in there, a couple of the smaller ones.
And I guess when you think about the S&P 500, then it's kind of a win-win situation, because I guess if a company were to go down,
Mhm.
then it gets out of the S&P 500 and the one that is going up gets put in its place. Would that be how
Yeah,
it works?
yeah. There's a lot of it's like a big scoreboard almost, right?
Yeah.
Obviously, if you're just tanking, then you won't be there for very long because we're
Yeah.
talking top 500, right?
Yeah.
If you've heard of the Fortune 500,
Mm-hmm.
Primerica is a Fortune 1000 company. Our goal is to get to the Fortune 500, and we'd actually be a publicly traded company listed on that index, which would be really cool.
Yeah.
We're a good company, but we're not good
Mm-hmm.
yet. So
Okay. Yeah, that makes a lot more sense than now. So these are all the same thing, just
mixed up,
they
and listed on different exchanges.
Okay, so going back then to stocks. So a stock is basically just you own a piece of the company then. Um, what makes the stock itself go up and down?
Hmm.
Because you see often, okay, if people are selling, then the stock is going down, the price is going down.
Mm-hmm.
When people are buying,
Mm-hmm.
then it's going up, right? Which is what you see now. When a lot of people are selling because of this uncertainty, you see everything's going down.
Mm-hmm.
And then all of a sudden they get some good news, whatever it is, and then all of a sudden it shoots up. Why does the number itself actually change, and who decides how high or low it goes, like what the price is?
Right. Well, I mean, obviously there's a set share price, right? And so
Mm-hmm.
depending on how that stock is rising and falling, it's going to change because it really just comes down to supply and demand, right? So if you and me are nervous and we're dumping shares,
Mm-hmm.
then we've just increased the supply, therefore it can't be worth as much. Can't be.
And then do people then like these guys? Here's a
Yeah.
picture I got. So we see this all the time on
Yeah.
TV or something,
Uh-huh.
right?
It's a real place. Yeah. Yeah.
So
The
is that
largest stock exchange in the world.
so this would be Wall Street in
Wall Street in New York.
New
Yeah.
York, right?
Yeah.
So are these guys controlling some of that, or what are these guys doing?
Well, these are actually independent contract. A lot of them just work for the stock exchange. They're staff members, and they're a lot of them they're actually they work for hedge funds. They work for big brokers, investment banks, and they're right there because they can catch information quicker than you and I can.
Mm-hmm.
Just a little bit, but enough that they're on
But
the phone and they're making moves and things like that. So a different game than I play for sure. I have no interest in doing that. It's very emotional, very high risk, very high stress. Me and my clients don't operate like that.
yeah,
So
and so
yeah. So
so
sometimes they're making decisions that are influencing the market.
okay, but then also most of these people would kind of be doing the same thing as me on my Wealth Simple, buying and selling
Yeah,
stocks is what most of these people are doing.
just at a different level, probably.
Yeah,
Yeah.
most likely. I mean, I'm at a very low level of buying and selling. I
I
put some money in now just to kind of see how exactly it works,
think it's a great
and
thing that
just
you're
to
doing.
and just to see what exactly they're doing,
Get
right?
acquainted, dip
Yeah,
your toe in the water.
that's all I want to do,
Hmm.
right? So I have a number of different things that I've bought.
Hmm.
But okay, back to this question about it going up and down, right? And yeah, so if there's a bigger supply, sure, then prices go down, right? That's kind of how you see everything, right? If there's tons of oil, too much oil, then the price drops because they got to
Price
get
has
rid
to
of
go
it.
down. Yeah. Hmm.
So then for one company, let's just say Tesla, for example, then.
Yeah.
So if all of a sudden a bunch of people have sold their shares,
Hmm.
is it the people at Tesla then, or this company, they're looking at that and then they're adjusting the price accordingly?
No, I don't
Like,
think that. So when you're public, you don't even have control of that anymore, right?
all right,
So
okay.
you have a set price, and you have algorithms, and that are basically valuing where your stock is at. You're out of control at that point in time. Your only job is to say, what adjustments can we make as a board,
Mm,
as a company, to improve this? How can we mitigate some of this damage and stuff like that? For example, like literally people were firebombing their dealerships and stuff
yeah,
like that. They're mad at Elon Musk.
yeah,
So that's not good.
yeah.
Not
And
great.
people are selling because of that, right? This
Yeah,
volatility.
yeah.
So you said,
But
so is there just an algorithm that depending on how many are being sold and how many are being bought, then it's self-adjusting.
Yeah, it is preset and pre-negotiated, right? And I'm sure
Okay.
it's subject to review, right? They'll review
Mm.
and say, hey, you know what? Like, because they'll post their quarterly financials and stuff like that, and say, hey, based on this, we believe that our numbers should be at this, and they'll work with it, right? Because
Like then Tesla or the other
Tesla and the
people.
stock exchange, they'll probably
Okay.
negotiate and say, hey, here's kind of where our numbers need to be at going forward, right?
Okay.
So see, it's the emotion that causes the artificial jumps and falls, but business is supposed to be like an escalator,
Mm.
smooth running. Because the idea, if you have a business, if you're not growing, you're dying. So you just want to always be at a steady state of growth.
Yeah. And I was gonna say something else about that, but
Yeah, Wall Street, and you got Bay Street in Toronto.
Beige Street.
Bay Street,
Oh,
yeah,
Bay Street, not beige.
yeah, yeah. No, Bay Street.
Okay.
Yeah, if you go up there, it looks very much like there's people in suits and investment banks and a lot of busy stuff there. And they got the Toronto Stock Exchange.
Okay. So, some more terms then that I've been seeing now that I have Wealth Simple. I would show you people, but I'm actually using my phone to record,
Hmm.
so I can't show you guys.
Yeah,
But so on Wealth Simple, now that I've been buying stocks, and so you mentioned ETFs. So an ETF is basically just like a group of stocks that a specific company has then decided, like let's say Primerica, you group 10 different stocks. You're like, hey, you know what, this group is, and then you give it a name. Like,
yep.
and this is an ETF, then it's just a group of stocks.
That's exactly right. Yeah, that's exactly right. It's called an exchange traded fund,
Okay.
right? That's what it stands for. And essentially, it is not a stock. It's a pool of stocks,
Yeah.
right? That's the idea.
And then it just gets whatever I then put in, for example, on Wealth Simple or
You
to a
get
company like you're working for now and stuff.
Yep,
I give you $100 and it just gets divided among 10 of
certainly.
whatever group it is then that
Yeah,
you're working
yeah,
with.
yeah. See, ETFs, they're actually not run. They're totally passive. They're not run by a human being. They're run
Okay.
by a robot, a robo advisor.
Okay.
And so they're very attractive for the person who's a do-it-yourself investor because you don't have to pay a fee, right? Whereas a mutual fund dealer like myself, we actually charge a fee
Hmm.
to invest your money for you. The difference is what you're getting is you're getting active management. You're
Yeah.
getting 10 people on average per fund with probably 100 years of experience that are making moves with that fund. Whereas an ETF's job is just to chase the index. That's all they're trying to do.
Oh, so we wouldn't call your guys' group an ETF.
No.
We just call it that. For example, Wealth Simple has an automated machine that does these things.
Yeah.
So that's
It's like
an
a
ETF.
do-it-yourself app.
But like you guys, for example, or other brokers, you wouldn't call theirs ETFs. All right.
Yeah.
Yeah,
Yeah,
that
that's
makes sense
right.
then again. I just figured then maybe it was like if you guys put together a group, that's also an ETF.
Yeah.
This one puts together a group.
Yeah. So a mutual fund is active management. ETF is set it and forget it. Passive, robo advisor. You have no advice, no financial advice whatsoever.
Mutual fund is personalized, or like people are doing it themselves.
Personalized, customized, usually with
All right.
active management and with a financial advisor.
Yeah.
ETF is just totally passively managed, which is nothing wrong with that. It's
Yeah.
just different people want different things.
Yeah, exactly. Yeah.
Yeah.
So then some more terms. So on Wealth Simple, then again,
Yeah.
on there I see they always have like the three-letter things. So one is like QQQ.
Right.
What is that? Is that just the name that they gave it, or is there a specific reason that they did QQQ? I see other ones are like QXX, or
Mhm.
what is that all about?
Those are ticker symbols. Those are just identifiers of that particular fund or stock. So Primerica's ticker symbol is PRI, right? Tesla
Mhm.
is TSL, APL for Apple. Those types of stuff. I'm not familiar with QQQ and QXX. They're probably ETFs because there's thousands of them now.
Yeah. Oh yeah. I mean,
Uh,
you
yeah,
go through the Wealth Simple, it's like ETFs, and then
yeah,
you can just scroll
yeah,
this one. This one.
yeah. So if you ever, so that's its own identifier for that particular fund or stock or ETF. Cryptocurrencies have them too.
Oh yeah.
Tickers.
So I put a little bit of money in crypto as
Crypto.
well
Yeah.
to get started. So now Wealth Simple does crypto. Do you guys also do that, or do you not do
Um,
that?
so it looks like down the road we're going to be offering a couple of the more reliable, steady cryptocurrencies in our
Yeah.
funds, but generally no, because it by definition has virtually been gambling this whole time.
Yeah, it's very up.
It's
You
too
noticed that a
volatile
lot.
for
Yeah.
us, right? It's more of a I like to always illustrate that when you're investing in the market, it's kind of like you're riding an escalator
Mm-hmm.
and you have a yo-yo in your hand and you're yo-yoing over the arm rail.
Mm.
So it's trending upwards, but it has its ebbs and flows. But the cryptocurrencies and individual stock pickers are more like riding a roller coaster and trying to time the market perfectly. That's not
Yeah.
our game.
Yeah.
If you find you're comfortable in that, again, not a gambler.
Yeah.
I don't want to gamble my money,
Yeah.
and if you were my client, I wouldn't want to gamble yours either.
Yeah.
So,
Yeah, it's definitely very volatile. I've
yeah.
seen that. So I did open one account and I put $200 in there, and I bought a little piece of a few different ones. And again, it's a testing ground to see how those things work as well.
Sure.
Right? Although I am completely confused as to how anything with Bitcoin and the blockchain technology that everybody's talking about. I'm going to get somebody on, a tech guy, I think, one day, and I just want to talk about what does that stuff even mean, because I
I'm looking forward to hearing about
am
it.
completely confused.
Yeah.
It doesn't make any sense to me.
Yeah. Yeah.
I don't understand it.
Yeah, it's interesting, and my friends are really into it too. I mean, I love the idea of it too. They said, look, it's a currency um, that's not tied to the Federal Reserve. It's not government backed and stuff like that. We need that because
Mm-hmm.
when the dollar crashes, we need something out there. Well, now in the U.S. administration, they actually do want to back Bitcoin and Ethereum and stuff like that. So
Yeah.
I'm not sure. I don't know. That's an area where I know next to nothing.
Yeah, and I know nothing.
Yeah.
But yeah, I'm hoping one day I'm going to find somebody, and then I do actually want to talk about this because it is a big topic now, because there's a lot of stuff going on with this whole crypto technology stuff.
Yeah.
And so it's definitely becoming a bigger and bigger part of our lives. And so something, I guess, to keep an eye on as to what exactly does it mean? What are they even doing?
Mm-hmm.
So another thing on Wealth Simple, are you very familiar with Wealth Simple,
Yeah.
for example?
Yeah.
Okay.
Had it for years. Yeah.
Okay. So on that, I've opened a TFSA account, so a tax-free savings account,
Yeah.
right? And so that's where I'm putting money in. So from my CIBC account, I have that hooked up there. So I just transfer that
Yeah.
to my tax-free savings account on Wealthsimple.
Mm-hmm.
And then under that account, I'm investing into stocks.
Yep.
Now, as I understand, under a tax-free savings account, we're allowed to invest, we're allowed to put $7,000 at the moment in per year. Is that correct?
Mm-hmm.
Now, what happens though? So let's say I put $7,000 in there and no more than that, but now I made $1,000 from
Mm-hmm.
that. What happens with that?
Well, that is first off. I'll say this: if I want to say, I hate it that they've called it a tax-free savings account.
Oh boy.
It should be called a tax-free investing account because when people think savings, they just think storing their money somewhere.
Yeah.
But if used properly, the tax-free savings account is the most powerful wealth-building tool in Canada. Nothing comes close to it. Not even real estate. Okay, so what happens is that whatever that $7,000 grows to, it's completely tax free. Now
Okay.
you have carryback room to when you were 18, and so you said you're 40. So a 35-year-old, it goes back to when a 30 whatever that was. How old were you when you were in 2008 or something like that? But the maximum that a Canadian citizen can put in there now, if they're 35 or older, is $102,000.
Okay, so it compounds as well. Like,
Well,
so
it doesn't
whatever I don't, or it adds. I mean,
it's unused contribution room.
okay, so if I put in 1,000 something,
Yeah.
and let's say that's all I put in this year.
Yeah.
Next year I could take my 7,000
Yep.
plus another 6,000 that
Plus
I
what-
could have done this year plus
whatever goes back to 2008, 2009, or whatever it was. Yep.
Okay, because I think I read a little bit about that, but I wasn't understanding
Yeah.
if I was reading it correctly. Because it was actually, I think, even yesterday
Mm-hmm.
that I read something about this, but I thought, no, I'm probably misunderstanding this.
No. Yeah, it's real. So for
Hmm.
example, that 35-year-old, 36-year-old could drop $102,000 into a TFSA.
Yeah.
Whatever that grows to, right, 7, 8, 9, 10%, it could be millions of dollars. It's completely tax free. You don't pay a cent of tax on it, and you haven't even touched your wife's tax-free savings account because she's a Canadian citizen.
Yeah.
She's got her own contribution room.
So, and I've thought about this because there's also RRSPs. Wouldn't it almost be better to invest into that as opposed to RRSP, or are there reasons that you would also want to do the RRSP maybe instead?
Well, okay, that's a good question. We get this all the time. That's a great question. So tax-free savings account, RSPs, those are just vehicles.
Mm-hmm.
It's just investment vehicles you're choosing. So there's the three-step hierarchy of investments is this. Number one is free money. So if you're fortunate enough to work for one of these companies that has, let's say they pay a match, right? If you put in 50 bucks a check, your employer will sponsor 50 bucks. That's free money. I'm not going to give you any free money.
Oh man,
So,
that's what I was hoping for.
yeah, that's not what I'm here for. So take as much free money as you can. I don't care if it's getting a terrible rate of return. That's 100% rate of return guarantee. So you use that. And then after that, we talk about tax-free money. And that's tax-free savings account. It is 99% of the time way better. And then once you've exhausted those options, then we talk about tax later money, which is an RRSP, because you do pay tax on an RRSP later.
Yeah, because I heard about that, and that's why I was wondering, well, would it be better if the money was put into the tax-free savings account then invested, as opposed to putting it in the RRSP, since that is getting taxed later as you're taking it out, right?
Well, yeah. So an RRSP should never be treated as a checking account. It is a registered retirement savings plan. Again, should be called a registered retirement investing plan because you can invest it as well. So if you made $50,000 this year, and you and your wife saved $5,000 bucks, you'd take your $5,000 and put it in an RRSP, and you're going to get a receipt for $5,000. You can deduct that 100% from your income. So now you're not paying income tax on 50, paying tax on 45.
Yeah.
And that money in that RRSP will grow completely tax sheltered. But when you take it out is how it's taxed. So think about this. Right now, you're probably at the peak of your, on average, between 25 and 45, you're at the peak of your income earning years. It would be not good to take money out of an RSP now because you're going to be taxed at your tax bracket. So the idea is when you're in retirement, you're not making that money anymore. You can start to pay yourself an income at retirement, and your tax will be a lot lower.
After retiring, the tax is lower.
Yeah, for sure.
But still then taxed each time.
Exactly.
I get a deposit from that.
Okay. So yes, TFSAs 99% of the time that is you don't even think about an RSP unless you've made too much money, and the government says, "Hey, you didn't pay enough tax through the year. Here's a bill." Then open up an RSP and pay yourself. Don't pay the government. Because you can just, you go to your accountant and he says, "Hey, I got this letter. I got to pay this amount in income tax." And he says, "Okay, Henry, $3,000 will do it. You put $3,000 in an RSP before April 1st. Bring me that receipt. I can claim it. You won't have to pay the government anything."
Wonder how many people are doing that.
A lot of people, yeah. We got bookkeepers that are referring clients to us, and I actually got a guy that I'm getting licensed in my business. I recruited him, got him licensed. I said, "You should just do this yourself. It's that way you got the trust with the client. You can just set it up for them." And now he's going to get an investment license with me. So, yeah, it's a really smart strategy.
Yeah. So next year, if I got to pay some tax back or whatever,
don't pay it.
Quickly put it into RSP. Yeah. Or the tax-free savings account.
Tax-free savings account is not deductible. Not deductible. So a tax-free savings account,
gotcha.
The benefit is you will never pay tax on it. So you take your paycheck where taxes have already been taken off, and the goal is I don't want to ever pay tax on that money ever again. So you invest it, and you will never have to.
Yeah, now I understand. Okay.
They're both very good, but have totally different purposes.
A little bit different. Okay, so the RRSP is tax deductible, as opposed to the tax. Okay. So so it's tax deductible now, but later on you pay the taxes.
Yeah.
And this one is not tax deductible, but we never pay the taxes or on the TFSA.
Exactly.
That makes more sense.
Yeah, I know it's a bit technical, but I think your audience will get a lot of value out of that because it'll just really understand. Okay, what makes sense for us?
Yeah, I mean, I'm just here for me. Like, you're explaining this to me, and I'm getting something out of it. You know, if those guys get something too, it's a bonus.
This stuff we talk about almost daily, and it gets me excited. I love talking about it.
So I've definitely learned something. So that's good. Now, RSPs then, I'm assuming that's also something that then the government uses to invest into stocks. That's my guess. Like when you put something into an RRSP, that money is obviously sitting somewhere. So that money is probably being placed into a stock market somewhere by somebody else, right? That wouldn't just be...
Actually, no. One thing that is being invested is that lovely line called CPP. That's getting deducted from all your paychecks, provided that you're an employee. If you're self-employed, you don't really pay that. I don't pay it.
Yeah.
I don't pay into it.
Mhm.
Yeah, so that's getting invested, and it's getting invested into companies. But RRSP, again, it's a vehicle. These are accounts that the government made for strategic benefits for you.
Wait. Oh, okay. Now,
The
so
government created these accounts, but they don't invest the money.
do our RSPs though do earn interest, right?
Yes, yeah, just
Okay.
like you can open up one in your Wealth Simple account. We open
Yeah.
them for people in our mutual funds all the time.
So what is the interest rate on something like that?
Well, again, so
Or
an RSP is just a vehicle. So you could open up you could go to CIBC
mm-hmm,
and open up just a standard RRSP to get
mm-hmm.
your tax benefit. If it's just a regular account, it'll probably pay you less than 2% interest. It doesn't even keep up with inflation.
Yeah, but it's at least more than what you put in, I guess.
Yeah, or
Okay.
you could go invest in the stock market and you can get
Yeah.
an average of 8 to 12%.
Yeah. Which is more.
Yeah. So again, it all depends on how it's invested, right?
Mhm.
Um, my parents who are 65 and 67 years old, they're not investing in medium to aggressive mutual funds because they're in the area of life where they can't afford much risk. When you're younger and you've got a longer time horizon, it's very beneficial to go ahead and I've never opened up a high risk account in my life, but medium risk, I think I'm very comfortable with.
Mhm.
Most of our clients are too. So
Yeah.
you can grow. The goal is to grow, and then you can,
Yeah. Take a little more risk,
yeah,
and yeah,
dial it down when you've gained a bunch of money later on, and it's more about preservation then.
yeah. So all of a sudden, you get one of the stocks. All of a sudden, shoots up. You never know,
That'll
and
happen sometimes.
yeah,
Yeah, yeah. The thing that really excites the crypto investors, because crypto can do that, you can have a year where you'll make 300%.
yeah.
Is that they're actually making it, if they may have already, is that you can buy a cryptocurrency inside a TFSA. So
Okay. Oh,
you could go make 300% on a crypto, and you won't pay a cent of tax on it.
okay. But right now,
Yeah,
opening
but it is
that, you would,
gambling. Don't get me wrong;
yeah,
it's gambling. Don't call it. Yeah,
yeah. Because I know when I opened my crypto account on Wealth Simple, um, like there's a lot of guidelines there or whatever, like with investing, or like, just remember it's very volatile, and a lot of warnings, and
yeah.
different things. Don't put savings in here.
Disclaimer:
Make sure you don't not doing any of these kinds of things.
results may vary.
Yeah, and they're asking lots of different questions. So, but that's good because it isn't something that's been around very long,
Yeah,
and that's the
yeah.
nature of new things, right? You got to learn exactly how they work too.
Uh-huh.
They have to work themselves out,
Yeah.
right? Work at their own kinks. How about another one? So, another term that I hear often is fiat. Now, there's also a car called a fiat,
Yeah.
but we hear about fiat currency.
Yeah.
What does that mean?
It's anything that's not cryptocurrency.
So, like
It's
Canadian dollar, American dollar, peso, whatever,
yeah,
euro.
yeah, gold,
That's
silver.
gold and silver is
Yeah,
also a
yeah,
fiat
that would
currency.
they'd still consider that. Yeah, yeah.
So, what does that stand for?
I don't know.
That's
Anything that's not crypto essentially gets government backed and things like that, where it's tracked and it's associated with the Federal Reserve as well, Bank of Canada. It's an asset that's nationalized and monitored. You can't do that with cryptocurrency yet. Sounds
Mhm.
like they're trying to do that in the U.S. there.
Yeah,
Yeah, yeah,
trying to. Well, I've heard, speaking about the U.S. and what they're trying to get in. So, there's two different things that I've heard about how they might try to get out of their debt, and it has to do with, I guess, money and Bitcoin and gold even.
hmm
So one has to do with cryptocurrency, and then buying cryptocurrency, maybe some. This is just my limited knowledge, but the idea of getting that investment there, and then that will basically rise, in price like crazy, kind of
Hmm.
like Bitcoin did, right?
Interesting.
Kind of, so I mean, Bitcoin, if you bought that 10 years ago, you're a millionaire, right?
Yep.
If you bought enough, you're a billionaire. I was thinking about buying Bitcoin back then, but I didn't know how to do it when I was in Mexico.
Yeah,
Man.
I heard about it, and yeah, never got around to it.
I
I
was
missed the
gonna,
train.
yeah,
Maybe not.
I
Maybe
was
not.
gonna, but I didn't know how I was supposed to do it while I
Yeah,
was over there.
yeah,
Anyways, so that would be an idea, one of the ideas that get the cryptocurrency, whether Bitcoin or maybe a different one even, and then invest in that, stock up, and then you have this cryptocurrency explosion. I guess you could, basically say
yeah.
that it rises exponentially, and there you have all your money. like all the money you would need.
I haven't heard that. That's interesting. Yeah.
And then there's the other one though that I've also heard, and apparently this is maybe something that's been talked about for a long time. Gold revaluation. And is that something that you've heard of? Maybe more gold revaluation.
A little bit.
And what exactly is that idea? So from what I gather, it's basically just saying, you know what, gold shouldn't be worth $4,000 or whatever it is now. It should be worth 100,000. I'm not sure how you go about doing that, but
yeah, I'm not exactly sure too, because I haven't done a whole lot more research on it. But like we have some mutual funds that actually hold some precious metal stock. We don't sell gold bars to people. Like you can go buy some gold at Costco and things like that, little bars. But yeah, essentially that would be again a supply and demand issue. So if let's say they go to Fort Knox and realize, oh man, we have less gold than we thought we did. We got to jack up the price and take inventory. How much gold do we have? Is it less? Did somebody steal it? And I mean, the administration down there is doing a lot of stuff. I never comment politically because if I do, it really alienates 50% of my audience and potential clients and stuff like that. But you got to be crazy to watch what they're doing down there and not be interested. It's they're just there's so much moot happening.
I mean, it's affecting all of us. Like it's affecting everything, right? It's affecting the whole world, stock markets, gold, cryptocurrency, like everything,
the hub
right?
down there.
Because what America does basically affects the world because they've been, in power for so long, like the major power for so long. And so obviously anything they do affects us, which we can clearly see now.
For sure.
Right. And so it is very interesting that there's a lot of different things going on. Like I say, different ways of paying off debt. The other day I was reading, somebody was like, you know what? They think the gold should be $100,000 for, what do they measure it with? An ounce or something. It's like, so depending on how much gold you have, that they would want to pay off their debt, that way. So, but just the idea of, if rather than fiat, I guess you said gold was fiat currency, something that's
from what I understand, it's a newish term. We're like almost in this different sect of finance and investments. We're dealing with Main Street families who don't really want to take the energy to buy and sell stocks and trade things individually and learn about those things. That's why, by and large, most people should probably invest in mutual funds. They want hands-off stuff.
Yeah,
let it go. So a lot of those things actually I'm not even too familiar with because I'll probably never get into it.
Yeah,
maybe with some play money, right? Some people. So I have clients where they've actually lost a lot of money with some bad bets in the market, and now they're changing from becoming gamblers to investors. But they still have this itch to go play a little bit. And I said, you know what? I honestly think you should reserve some of that money and go play, because I can tell that you need it. And so take some and go do some more cryptocurrencies, like for example, like flipping a house. That's a great thing to do. We've done that, but it's not an investment, because investment by definition means long term. It's a speculation,
a growth thing.
That's not a bad thing. It's just they are two different things. So if while I think real estate investing is good, and gold and silver are very smart things to do, always leave some room for long-term compound interest paying investments. Real estate investing, for sure. But so
I have seen the price of gold then, like on the stock market, has been going up. Like over the past year or two, that seems to be going up very much. And from what I understand is kind of when the markets are kind of in turmoil like they are now, that oftentimes in those situations, the people are going back to gold, and that's raising the price then of gold again.
They like tangible stuff.
It's like, let's get the big
precious metals. Yeah, absolutely. They put them in, they buy them, and they put them in a safe, and you can go sell them at a buy and sell at the London Gold Buyer there. If you ever drive down there on Highbury, you see the prices for gold and silver.
Okay.
Yeah, I have a friend of mine who he told me that he bought a couple of bars of gold, essentially what would have been like $3,000 worth then. And it was like 5 years ago, so it's worth a lot more now. He had some money and said, I'm going to do it. People thought he was crazy, and
not crazy now.
No.
Yeah, so that it does seem. Now I don't know about this idea of going to $100,000, but but it has been going up quite a bit. I've noticed again on that graph or whatever. It's like you see that loop going up pretty fast. So,
but that would be one thing. So that's like a place where you'd invest your money. It's kind of like investing in a home. It's not gonna be anything exciting. It's just gonna be gradual appreciation. You won't see the price of gold fall. You won't see the price of silver fall. You won't really see the price of real estate fall.
Yeah.
Just a sound place to park your money. You're not going to get rich off it, but it is a good asset in your portfolio.
Yeah. I guess because thinking about regular stocks as opposed to something like gold or silver, they're based on companies that can completely go bankrupt and they don't exist anymore, which means that your money there basically doesn't exist anymore, right?
Yeah,
As opposed to gold, well, a gold bar will always be there,
always have
regardless of what
value.
what the price is,
Yeah,
but it's still there.
because it's a finite resource, therefore it's precious. You
Yeah,
got a gold ring on your finger, right? You can't replace gold.
yeah.
Yeah. Mm.
Oh, what do I got here? There we go. Oh, another question I had. So
Mm-hmm.
thinking about how the stock market works now and pictures like this of how everybody's busy on Wall Street or in Toronto, how long has this system like this been in place? Like that this is how buying and selling works, or like stocks.
Close to 100 years, about 100 years now since companies decided to, in order for them to scale at large, is to make it so that that average Joes, you and me, could invest in their stock, could actually invest money into shares of the company, become partial owners, and pay profit shares. Right.
Mm-hmm.
The reason why your money is growing is because you're investing in their company, they're giving you a piece, and therefore your piece is growing in value. And so when you decide to cash out, you're cashing out at that value. So probably close to 100 years. I don't know exactly. But now, obviously, with technology, it's turned into, it's unbelievable, right? The
Yeah.
financial industry is by far the largest industry in the world,
Mm-hmm.
like way, way bigger than any other industry.
I guess because every industry is dependent on the financial
Yeah, we all
industry
want lending.
because
We all want funding and money. And yeah,
so I mean obviously the idea of stocks or buying into something that is not new, right? And you even thinking about in the Bible, you read about something like that, like Jesus saying, giving parables, you should have put your money in, at the lender and got some interest back or whatever, things like that.
yeah,
So the idea of buying into something
yeah.
and getting interest from it
Hmm.
is not new,
No,
but maybe the idea of having it public the way it is now, though, that is fairly recent. And
that's
like, so anybody, like opening it up to anybody as opposed to just private.
Yeah, exactly. And then there is divisions called private equity, where there's companies that are not public, they're private,
Yeah.
and so they have an exclusive class of investors but you have to be a high net worth individual, right?
Mm-hmm.
Like for example, CIBC invests in some private equity. It's called they have a wealth division called Wood Gundy, and BMO has Nesbitt Burns. Those are private wealth managers. And so you have to come to the table with, I think CIBC is very generous. They let you come in with $250,000. My bank is $1 million. Like I know I have a friend who works there. He will not look at any investor with less than $1 million. He'll invest in private equity. Yeah.
Okay. So,
Yeah. So you get some
so
more exciting returns sometimes, but how many Main Street families can accumulate $1 million?
yeah,
That's where we'll come in and we'll set up some world class mutual funds for $25.
yeah,
We're happy to deal with the 90% middle income bracket.
yeah. And then to invest in some of these public companies that are
Yeah, they're doing
out
great.
there. And maybe something that people don't realize often, I guess, thinking about a lot of the companies that we hear about often, or sometimes people want businesses to go down or to go bankrupt, or that all of the major companies will go down, because of maybe things they're doing, or things they don't like. But what I feel like maybe a lot of people aren't actually realizing is that their savings, for a lot of people anyways, that their savings that they have are connected to those companies all growing and profiting, like with these investments, right? People
Hmm.
have their investments somewhere.
Yeah.
And if you want all the businesses to go down, I mean, that's fine. I guess that's an
So
opinion.
will your checking account.
But yeah, like that everything
Hmm.
will drop, and so your
Yeah.
savings, that you've saved up, like we saw, like a lot of people now, because of what's going on, the stock market went down like crazy. And what happened to everybody's savings accounts, retirement accounts, and all these things that they had?
Yeah. The
They're
values
worried
went
like
down.
it dropped huge.
Yeah. Yeah.
And so, just to realize that you know everything you are investing, or very often, like you don't have to, you can invest in other things, but people aren't thinking about that.
Yeah.
You're actually investing in those companies. So if you want them all to go down, like that's fine. Maybe you don't like them, but then also realize that that's the reason why all of your savings are also going down.
Yeah, absolutely, for sure. And then even to take it a step further, right, for the people that choose to not invest because it's quote unquote too risky, even talking about the word stock market crash,
Mm,
if by definition the stock market's never crashed because that means that it would never recover. So if
mm,
everything goes to zero, well, you've entrusted your money to CIBC. And the
mm.
CIBC is a public company that invests your savings into these companies. That means
Yeah,
your bank account balance is going to zero too.
yeah.
It's not a very good thing to wish upon companies.
Yeah, yeah. So if
Yeah,
I have $10,000 in my account,
yeah,
yeah, they're not just letting it sit there. My money's never there. They're actually putting that in
absolutely.
to these places like that
Yeah,
we've been talking about,
yeah,
and they're making lots of money,
yeah, 8, 12,
right?
15, 30%,
Yeah,
and they're happy to pay you one.
yeah,
Or to lend it to me at a credit card at 28%.
yeah. There we go. And
It's
they
we call them the middleman. We call
yeah,
it, say, just bypass the middleman. A
yeah,
bank is a great safe place to store your money. I'd look other places than the bank to invest it for sure.
yeah. But I guess you have to know about these things, but you have to
Yeah, of
do a little bit of
course.
searching, a little bit of learning,
Hmm.
which is what we're doing here.
Yeah,
Hopefully, you guys are getting a little bit of
yeah,
something. And these are some basics, I guess, of investing. And I've already actually, yeah, learned quite a bit from our discussion so far.
mhm.
So it's been really good. Do you have any other closing thoughts when thinking about stocks in general that you think would be beneficial for us?
Well, for anybody who doesn't know how it works and would like to get involved, but it's kind of feeling the way I did too, where they're feeling like, man, it's already seems like it's hard to earn a dollar as it is, and then to make my paycheck stretch far enough so I can have some room. You don't need a lot of money to get started. I think
Mm-hmm.
it's good to do what Henry's doing, which is dip your toe in the water and learn as you go. Because the truth is, maybe not the best note to leave this at, but you kind of, with the way inflation's going and the amount that we need for retirement, you kind of have no choice but to become an investor.
Because
Because
inflation is going so high, your money's just getting
yes,
less and less worth.
yeah,
Yeah.
and you can do it without gambling. You can do it in ways that are dependable, reliable, that have great, strong track records,
Mm-hmm.
and that you can, maybe change your family legacy and actually be able to show the next generation what it looks like to actually invest your money wisely. Because I
Mm-hmm.
think it's really up to us. If it's not, I don't think it's the school system's job to teach our children about money. The government would be a terrible example of how to use money because we spend
Yeah.
money that doesn't exist, and your grandchildren are in debt because of it.
Yeah. Yeah. Oh yeah. It's
The
terrible.
media, it's up to us to be good stewards of what we had and show
Mm-hmm.
them not just how to work hard and earn money. That's a good thing. That's
Mm-hmm.
step one. But how do we make our money work for us too?
Mm-hmm.
That's also a good and even biblical thing that
Yeah.
we
Can
need
we
to
make
teach
it
your
grow?
children.
Yeah.
Yeah, because if we don't, I'm nervous about what we do. So that's the stuff me and my team talk about often. Is that
Yeah.
we're not just in the we're not financial agents who work on commission.
Yeah.
Our job, this is our ministry,
Mm-hmm.
is to go and deliver financial education. Because if we don't, where will they get it?
Mm-hmm.
Yeah. So
Yeah. And
yeah.
I think oftentimes too, maybe we think about everything that's happening in the world, and then, well, me and my little spot where I am, I can't do anything. Or we think that the government overall has to go in a good direction for me to do something good,
Right.
right? Even thinking about, me kind of involving myself in how politics works in Canada in general, but even local politics and what's happening. Even if, let's say, the federal government isn't making good decisions, let's say the federal government does a lot of things that I don't like, or whatever the
Mm-hmm.
case may be, but locally, I think you can still have really great municipalities
Mm-hmm.
and really great like regions like that do very well, that are very healthy,
Mm-hmm.
even when the government itself, I mean, that's it's a government, like that's a small government, right?
Yeah.
But even though the overarching government maybe is going in a direction that maybe you don't see is very healthy,
Right.
but we can do that in our local region, like just as local people. like our friends and family in the areas that we are,
Mhm.
that area can still be healthy, and then maybe we can influence others, right? And in the same way, even if the government's going into lots of debt, right, and that's obviously debt that we're paying, but we can start doing small things in our own lives, in our
Yes.
own families, in our own communities that are different,
Yeah.
right? And that makes a difference.
It sure does, and I've been thinking about that more and more lately too. And I even said to my wife the other day, I said, "What would you think if I were to ever try to run for town councilor in Aylmer or something like that?" And
Yeah.
she's, "Please don't. Like, just like you're already enough in the space as it is. Like, you're just in the public eye, and it's not that I want to go out there and be in control. I want eyeballs on me, but I think maybe there is an impact that we could make here. And I think a lot of it times too, we kind of, especially this past week with our federal election, a lot of people have been feeling like, does it even make a difference what I
Yeah.
say and what I think? Because I really felt this way, and then the election results were this way. Maybe next time I just don't vote. Well,
Yeah.
um, your voice is being heard,
Yeah.
right? Don't forget that. And
Yeah.
there's things that you can do, first in your home, and then in your community, and then even up to the federal scale.
Yeah. And doing things in our local community makes a big difference too. I know, I mean, my last episode then talking with Dan, right, and
Yeah, that
him
was a
being part
great
of the
conversation.
municipal council. And, I consider that for myself now too. I'm in the middle of figuring out how things work, but I wouldn't push it off. I think it could be something that maybe in the future I would consider.
Hmm,
There's not many people that are doing it,
that's right.
right, that are there. And so,
And
you
yet we
know,
want to be represented well.
yeah,
We want to
so
be represented well. We want to make sure our dollars are spent wisely, but we don't really want to commit to anything.
yeah.
And
Or
um,
like Dan was telling me, I forget if it was, yeah, it was actually on the podcast. Trying to remember whether it was there or just outside of our interview.
yeah,
But I'm asking him how much participation there was from the community, right? And he's saying that there is none, basically,
don't show
which
up.
is like what we're all doing, right? He's like, that's how he was before he just involved himself as well and took on the role and started participating.
Hmm.
He was the same way. And the budget meeting just passed, and that's the money. Where our money is going, where our finances, what are we investing in as a local municipality, right? And he said, and people don't know about that either. We're not participating. We're not, letting them know our
Hmm.
thoughts or giving guidance or helping,
Yeah.
or putting ourselves in the role of maybe somebody in the local council to help make some of these decisions. Because, well, if Bayham or Elgin or some other place, one of these councils, they got a couple $1 million that they're planning on spending this year, then well, where would we like that money spent, right? And we can help decide those things, and we don't think about that,
Hmm.
but that's a lot of money.
It's a lot
What
of
would you
money.
like to what would you and I like to see in our local community? Well, there is tax being collected from the property taxes and stuff, so there is money. We got to fix obviously things, but then there are investments being made. What kind of investments would we like to see made in our local communities? What would be healthy in our local communities, right? And where can we put money that would help it to grow? And we don't think about that very often.
Hmm.
So I
Yeah.
think it is very, very important to consider. Not everybody's going to run for council. Obviously, we can't all sit in the chair,
No.
but maybe more of us should consider it.
Yeah, I think we need to step out of our own little shell sometimes,
Yeah,
and just really put our mouth where our money is,
yeah,
maybe, right? And we're the money's going out regardless, right? So why wouldn't we want to step in
mm.
and participate in that?
Just help give a little input,
Yeah,
right?
absolutely.
Just
Real people working real jobs, hearing real stories, and then you can take those stories to the table.
yeah,
And because like, I don't have any friends in local politics,
yeah,
but if I did, I'd want to hear from them, like, what's going on there. Maybe I don't even want to go to the meetings, but can you fill me in on some of the things that's going on there?
yeah,
Yeah. So
yeah. I do actually want to start participating in the Bayham meetings now
this is
soon.
considered
So
Bayham,
yeah, so this is
Straffordville.
yeah. So I
Yep.
learned that too. So this is Ward 3.
Ward 3.
Yeah, so it's in 3. I didn't know that either. So yeah, this is
Mm,
3, and then Strattonville's 2, and then on that side going to the beach is
okay.
1.
I think Aylmer is just Aylmer. If you live in Aylmer, it's
Yeah, I
just
think I
like,
saw that
yeah,
the other day. Yeah,
yeah,
there's Elmer and then yeah, different regions.
yeah. Well, one thing I've learned about this community is that it's fiercely loyal.
Mm,
They love to see small business. They love to see people taking a chance on themselves, and they love to go out and support local. I was worried that after COVID that would be abandoned, but it's not true. And this community I really appreciate it. You see examples like that in Aylmer with the new gym that's been set up there.
Oh yeah.
800 memberships in
Oh
less
really?
than 6 months.
Wow.
That's unbelievable. It's 10% of the population of Aylmer. I mean,
Yeah.
they love to support local businesses,
Yeah.
and I think we need to reciprocate all that.
Yeah.
Mhm.
Yeah. I think it's very important too.
Yeah,
Maybe our local communities need to be strengthened in that kind of way again.
for sure.
Local Life Ontario. That's what we want to do.
That's it.
Strengthen our
Well,
local communities.
and I hope that I hope that the stuff I was sharing with you wasn't too much jargon in the financial space. I hope it was
No,
received
it's
well.
really good. I could understand. I
Yeah,
think most of it, like a lot of it, made sense to me. And so if I could understand it, man, you guys out there, you're a lot smarter than what I am. So
yeah,
yeah, so I think it was very good. Thank you very much.
of course.
And back to this picture. So where do you think this is?
Pinafore Park, St. Thomas.
That's right. It is
Yeah,
Pinafore Park. So if you guys haven't been there, it's actually a beautiful park in St.
yeah,
Thomas. I really love that park. We were there on the weekend again.
nice.
It's really nice.
Really great playground for the kids,
Yeah.
and they got a splash pad in the summer.
Yeah.
Great walking trails, and I know that because I was a groomsman in one of my best friend's wedding, and we took photos around here. I'm like, I bet you this is, but I'm not 100% certain. And
Yeah. That's
yeah,
where it is. Yeah.
yeah, exactly. And they got a mini golf place right next door now too. I don't know
I
if you
just
saw
heard
that.
about that on the
Yeah,
weekend.
I haven't checked it out yet, but it looks like
That's
a
supposed to be
blast.
new, right?
It's 2 years or less. I guess you're
Yeah.
new to the area again.
I'm new,
So
yes.
2 years
So
or
I'm
less.
new.
Yeah,
Yeah. So
yeah,
everything's new then because I'm new.
yeah. That's right.
All right. Well, thanks a lot, Tony, for
Of
joining me
course,
for this
of course, it
episode.
was fun.
And thank you all for listening again to this episode of Local Life Ontario. Hope you guys learned something like I did today. And don't forget to tune in for the next episode.